Welcome back. You're watching Closing Trades. I'm Harsh Saita, with me Sneha, and we're joined in the studio by Aditya Kunda, our partner and Vice President, Complete Circle Capital, to talk to us about how he's viewing markets. Also joining us is Kunal Parar, Vice President, Technical Research and Algo at Choice Equity Broking. Well, Kunal, let me come to you first because it's all about the technicals these days. There's just so much pressure on the index. What are you making of it? Reasons for it? When do we see a bounce back?
Well, good afternoon.
Very good afternoon.
And if we talk about market, but obviously volatility will be there. And VIX is trading at 14 level, trading about 12 marks. So higher volatility will be there because we are going towards the budget days. Not only this, Trump uncle is also there, who is hampering the market sentiment. Not only this, in March we have this West Bengal elections. So till March, I think we may see many roller coaster rides in this Indian markets. And if you talk about particularly last 2 weeks, then it will be like high roller coaster. You do not need to be anywhere in the world like Dubai or Singapore, because this ride is there in the Indian Nifty markets. Right now, it is trading at 25,040, and if we may see a further downside momentum up to the level of 24,900 to 24,800. If Nifty doesn't sustain above 25,300, and let's say if Nifty is sustaining about 25,300, then sharp recovery would be there up to the level of 25,600 to 25,900. Now, since last 3 days, FIS has been in like a heavy selling, and we have been witnessing some kind of short covering at present level, which they are squaring of their short position present level. So we have witnessed the selling pressure based on the FIS selling pressure only. So level to remain, the level to remembers are 25,000 on upper side, and 24,900 to 24,800 on lower side.
Well, thanks for that view. Aditya, thanks so much for joining us in the studio. Give us a view on how one should be approaching the market right now in terms of, do you buy this dip? Do you wait for it to fall further? Obviously, bottom fishing is difficult to gauge right now, but what should the strategy be?
I think Sneh, last 15 months have been kind of a roller coaster, like Kunal just said, right? And I feel we are finally at the end of the tunnel. So some light is definitely visible. I feel that the 27th Jan EU FTA should give some leg up to the markets. And of course, we have the budget coming up on February 1st, right? And a lot of key sectors would be in focus, of course. I feel that, this is a good time to actually start deploying that liquid money or the money that you had saved up for a rainy day. The money that you wanted to deploy when the market falls. Sure. So in mutual funds, obviously, you can do say a 5 to 7, 8 month STP from liquid funds to equity funds. And when it comes to direct equity, I think you can start looking at mid caps and small caps. You can start adding them on dips. Obviously, the last 3-6 months have been volatile when I talk about small mid caps. The earnings have been there, but still the stocks have been falling. But I think the next 2-3 quarters can give you a good average price.
So amid a market like this, Aditya, would the strategy be to try and remain broad and open-ended with an SIP or a mutual fund? Okay. Or is it time to look at individual stock ideas or sectoral themes?
Okay. So the thing is, I come from a business where we do both, right? We have a PMS, we have our mutual fund business as well. So SIP is something that I always preach to everyone. If you don't have the time, if you don't have the knowledge, the best idea that you can deploy is a mutual fund equity SIP, right? That takes care of your investments on autopilot mode. But if you do have the time and if you do want the kick out of the markets, right, then definitely you can start looking at some sectors where you know that they're technically strong, the earnings are coming in, you are seeing some deal making happen over there, right? So for example, the financial services sector is one where we have seen a flurry of deal making. Every week we have seen India's largest FDI come in a lot of companies. Then you have the auto and the auto-ing sector, which has reported good earnings and technically on the charts as well, they are looking strong. And obviously there are some future-linked sectors, like a recycling or a manufacturing that you can look at, right? So this is my pecking order basically that one can look at.
Let me talk specifics, Aditya. Paytm, that stock is down on the back of what? 128 crore knock on EBITDA. flow through on profit after tax, likely adjusted for the tax impact. And that's, of course, H1. So if one were to annualize it, it will be 250 crore and change.
Yeah.
How big of an impact is that, in your opinion?
So obviously, this is more of a sentimental news that has come in for Paytm. The PDIF that is there, people are speculating that it will not actually extend beyond December 2025. And like you said, the hit would be straight to the bottom line. But back of the envelope calculation suggests that if the sound box charges, if they increase it by 10%, from 100, if they make it 110, it will more than offset the loss. So I feel this is more of a sentimental thing that has played out in the markets today. We all know that markets are extremely pessimistic. So even a small negative news can actually derail the stock price.
Kunal,
10% impact. Sorry,
Yeah.
I want to just
No, go ahead.
persist with that point. 10% impact. Now, Paytm's market capitalization was what? 80,000 crore, if I'm not wrong. I'm just going to quickly pull that number out. And a 10% knock. Okay, so 80,000 crore pre this, and therefore 72,000 crore now.
Correct.
8,000 crore wiped out. And this is not something which this 250 crore number was not going to go up substantially in coming years. It was largely expected to remain very, very flat.
Correct.
Now, pricing, if with 1 crore devices deployed, Paytm, in terms of the pricing, even if a 10% increase, I think that's what Aditya is saying. Paytm, how does the 100 rupee number come? I'll quickly explain what Aditya just said. The 100 rupee number per month is the rental number which Paytm recovers from the merchants to which they distribute sound boxes. So a 10% increase there could offset to a certain extent that entire 256 crore annualized number. Basis the first half back of the envelope math is what Aditya was suggesting. But Kunal, just on charts, how does this one look? 197.
If we talk about Paytm, the way stock has been trading on its daily chart, I think one need to wait and watch because we have been witnessing heavy selling from its top. Right now, stock is down by 10%, trading below its 50 and 100 days moving average. Not only this, strong support was there at 1240, and stock is trading below this level. So we may see further pain the counter up to the level of 1100. And at this level, if stock even break this level, then further pain would be there. So further south march would be there up to the level of 950. So it's a clear sign based on the technical indicators. Please avoid this stock as of now. No need to hurry for this counter as of now.
Wait and watch for Paytm is the call coming in from Kunal. Just want to mark some of the other big losers in the market today. It's 8G Infra seeing a big slash on the back of the raid or in fact the search operation that's underway from the CBI and the authorities at Patna and the company. Adani Green, Energy, Enterprises, the Adani basket of stocks all under immense pressure. Paytm, like we were talking about, a 10% cut now. Syngene, 8.5% lower on the back of earnings. Aditya, just want to understand, in keeping in mind something like a Paytm and from yesterday an IFL Finance, do you believe that the negative reaction to some of these stocks is exaggerated, and this is only because of the cautious environment that we're seeing in the market right now? But do you think it warrants such a big cut? Something like an Eternal is lower by about 6% today.
So definitely, Sneh, I feel that, we live in pessimistic times. Everybody's running headlines that lakhs of crores of investor wealth has been wiped out, right? So definitely I feel that all of these cuts are unwarranted for. But then such is the nature of the markets, right? Howard Marks always says that, markets are like a pendulum. They swing between euphoria and greed. Euphoria and panic, right? So right now we are at the other end where everything is in a state of panic. Even if earnings are good, people end up selling those shares. And it's like an attack. It's like a bear attack from all the sides. Our currency, our commodities, our equity stocks, our bond yields, everything seems to be under an attack, right? So obviously, this is a time where everybody is scared, everybody is pessimistic. But then I just want to tell everybody that investing is like a Mumbai road, right? It is full of potholes. So we tread on shaky grounds, but then this is a part of the process. So I just want to plead to everyone that, just be patient and keep the faith in the Indian markets.
So
And let's hope the Mumbai roads improve.
I mean,
No, but that apart.
what's the probability that the market improves before the Mumbai roads improve? There's a very high probability that actually does end up happening.
But because Aditya said that everyone's flashing as to how many lakh crores have been wiped out. I mean, we haven't been flashing that number. So let me just put it out there.
Thank you.
3 lakh crore is what is wiped
We've
out
just
in
done
trade today. So a lakh and a half crore in terms of the large cap, around 80,000 crore in the mid cap space, 45,000 crore in small cap, and micro cap facing the most amount of pain in relative terms, 20,000 crore wiped out even from the micro cap index. What are you buying at this point, Aditya?
So, like I said, Harsh, before the interview, we were just discussing. On the mutual fund side, obviously, small mid caps look good. Balanced advantage funds look good. On the equity side, obviously, we are going a bit towards tactical bets where we see a lot of value in the fall. And obviously, small mid caps are starting to emerge in that particular sweet spot. And obviously, again, like I said, this is not a sudden one-day deployment that we have to do. We are going quite slow. Because as you can also understand, we have been going through this roller coaster ride from the past 15 months. So we never know where the bottom is, right? And we never know when the tantrums will also stop or when the new geopolitical order will also start or stop to shape up, right? So yeah, this is a slow and obviously a painful process.
Kunal, what are your picks for this kind of a market? Kunal, your picks in this kind of a market?
Picks from my side, two stocks are there, and both are on buy side as of now. No doubt the market is on lower side, but selective picks can do some better for our traders and our viewers. So first pick is equity small finance bank trading at 71 level. Multiple technical structures are there based on which I am suggesting these stocks. It has already given a breakout of the upper band of downward falling channel formation. Not only this, on a smaller time frame, it has already given a breakout of its upper band of upper edge channel formation, trading above its 50 and 100 days moving average, and it has also given a breakout of its neckline of copper handle formation. So multiple equations are there which is suggesting to get into the stock for trading to positional perspective. We will keep SL at 64, and if we talk about target wise, first target comes at 77, and if stock break this level, then further northward march would be there up to the level of 85. So first is Equitas Bank, and the second is Fortis. Right now stock is trading at 1122. Technical structure looks very attractive at present level, and the way stock has been trading on its daily chart, further upside would be there up to the level of 1154. First target is 1154, and if stock break this level, the further upside would be there up to the level of 1210, and we will keep SL at 1080. So from my side, it's Fortis Healthcare and Equitas Small Bank.
Right, Kunal. Aditya, let me come straight back to you. So you've given us the bigger themes: mid, small, over, large, and you've said that it's a good time to start buying, but maybe a little more granularity as to what is it that you're buying in terms of sectors, spaces, subsectors. I know you can't talk names, but at least give us a flavor on what you're liking at this point.
Okay. So Harsh, we have spoken a lot about banks. So in banks, specifically the smaller banks, right, who are actually clocking in a higher advance based growth than the deposit growth, right? So that shows their aggression basically. Coming to auto ancillaries, we feel that maybe in the next 2-3 quarters, the PV segment of the auto ancillary sector would come to maybe it will slow down, and then it would be the two-wheelers and the commercial vehicles that would actually pick up, right? In the recycling sector, one can maybe look at the companies which are again available at attractive valuations, who are doing good capex. This is a time when they actually have negative operating leverage, and when the new capacities come in, they would have a huge operating leverage. A lot of them have fallen 30, 40, 50%. So definitely you can go look over there. In the EMS sector, again, we have seen the EMS story play out in front of us. We obviously haven't taken a call yet, but then I think that sector also looks quite important for our economy and obviously for the markets. So one can definitely look at some companies over there.
Okay. Aditya, let me take a pause. Kunal, we'll let you go on that note. Thanks so much for joining us. Let's go across. Snehi there with the close and for the wrap for the week as well. In fact, move from, and broader theme, right? What you suggested was broadly move from debt to equity now, you know, from your liquid funds to your, maybe with a tilt of equity. And of course, even within equity, your tilt is towards mid and small. Talk to us at this point, if you were to be holding, say, a 100 rupee portfolio of which 20 rupees was in liquid funds, how much of that would you move immediately to equity, and how much of that would be large versus mid and small?
Sure. So Harsh, out of 20 rupees, obviously, out of 20%, obviously, we would have straight away moved the 20% or 20% right away.
Okay.
And the rest would be deployed in the coming 6 to 8 months. Obviously, with the bearing that we can accelerate or deaccelerate depending on the markets.
Sure.
And like I said, you know, small mid caps do look interesting. So obviously 4 rupees has gone up front, 16 rupees are left. So I would say at this point of time, we would do more towards small mid caps, and the rest slowly we would deploy towards large caps.
And broader correction, would you expect from here? So every 5% you would deploy, and any reasons why wouldn't you deploy more than just 20%? Because if you believe that the correction has been substantial, then you should be deploying all 20.
Right, but then, you know, Harsh, from the last 6-9 months, we have seen value picks getting more value, right? You know, they are becoming more and more value, right? So that is why at this point of time, we don't want to deploy everything at one go, and we want to go slow, as simple as that. So instead of making emotional based decisions, we want to put in a system.
Sure. Process based, and thank you so much for that. Now, we've got JSW Steel's numbers flashing on the bottom of your screen while we speak. Of course, markets have closed. And that's all the time we have. Aditya, thank you so much for joining us in studio today. It's great to meet you in person these days.
Thank you for
just the
having me.
convenience of doing this over Zoom is so much easier. So it's good to have you here.
Thank you.
But viewers, that's all the time we have on closing trades today. Of course, one eye on JSW Steel. You'll have plenty of other earnings coming through this weekend. Stay with us all through the weekend. You'll have Kotak coming out tomorrow, Kotak Mahindra Bank. You'll have Axis Bank coming out on the 26th. So it's going to be a Republic Day with a Nifty 50 earning thrown in. So you want to stay tuned with everything that we have in terms of coverage. JSW Steel, of course, we'll address those numbers. But out of time on this edition of the show. Thank you so much for watching.